I'm Karen Ingersoll. I'm with Keller Williams Realty Biltmore Partners. I'm here today with Stacy Gross from Caliber Home Loans, and we're just going to have a conversation about interest rates and what affects interest rates and the whys. And a lot of people have questions about what's happening today.
Great question. So rates are affected by a couple of different functions.
Mm-hmm.
A lot of times when you see movement in the stock market, that can have a big impact on the bond market,
Right.
which is directly correlated with interest rates. The other piece is when the Federal Reserve makes changes or moves or changes how they are going to handle the mortgage-backed securities. That can actually impact the bond market, hence changing the interest rates. And in many cases, we can see a rate increase if we see stocks are doing poorly. Sometimes the bond market does better, and we can see an improvement in rates. So there's kind of a back and forth with the rates.
And that's something that just happened recently, isn't it?
Well, it is. Yes, correct. And it is ongoing, right? So if you look back at the average rates over the last 30 years, for example, historically, the rates have been at 5.3 has been the average.
Right.
So obviously we've seen years much higher, we've seen years much lower. But we're actually now hovering around the 5% mark, so it's right in that area.
Right. So historically, we're actually doing very well.
Correct.
Okay.
Correct.
And it's just a little scary for people to see them go up,
Right.
and we're still doing very well.
True, because a lot
Okay.
of times depending on the interest rate and what you've been pre-approved at, that can dictate how much you're going to qualify for a mortgage. So it's important that if you are sensitive to the rates, that you're watching that watching the market in general.
On an ongoing basis.
Correct.
So let's talk about what would affect an interest rate. Say I'm a buyer and I want to purchase a home that I found and that my awesome agent helped me find.
Right.
And what's going to affect my interest rate there?
Great question, because now at the individual level, what dictates your interest rate will be based on type of property. Maybe it's a single family residence versus manufactured property. That's different. Condos can have a different rate tied to them. Also, a big impact is credit score. So depending on your credit score, type of property that you're purchasing, even the money that you're putting down on a property, those can all impact the actual rate that you're going to receive on a property.
This has been great. Is there anything else that you think is important to add at this time?
It's not too late to get in on a great interest rate. The market has sustained, historically low interest rates, that if you are at all interested, as we progress, and what we're told is what we're seeing is going to continue to increase over the next year, it's still a great time to buy. And if you are thinking about buying, Karen Ingersoll is a great real estate agent. I've had the pleasure of working with Karen now for over 3 years, and she's a great agent.
Thank you. And Stacy is a fantastic loan officer with Caliber Home Loans, and I'm going to tell you, you're going to be taken care of in just the best way. So
Thank you, Karen.
thank you very much.
You're welcome.